Welcome to the Big Biz Show. Taking care of business. You want fast-talking, hard-hitting discussions on business and finance? Maybe with a barroom slant and some really salty peanuts? We're not counting calories. We're counting cash. Before we get to the man with the financial plan, meet the money team. Costa, Mary, and Greg. Now, Captain Finance himself, Sully.
That's right, from the Loft 100 studios in beautiful, sunny Southern California, it is the Big Biz Show. Wherever you're watching, wherever you're listening, we thank you for being along for the ride. I'm Costa. That is our executive producer, Mr. Greg Todorov, and of course, Captain Finance himself.
Yeah, that's it. Hey, did you see my Phillies? Damn, clinch not only the division. Come on.
Wait. Let's back up here. Your Phillies. What happened to your Padres?
I never were my Padres. I was a Philly fan ever since I was a little kid.
What?
Oh, yeah. My two favorite teams were the St. Louis, the Cincinnati Reds.
Oh, yeah.
And the
Big
Phillies.
Red Machine.
Big Red Machine.
And then, of course, the Roberto Clemente years.
The Pirates?
Sure.
Matt,
Oh,
yeah.
Look at Matt. Look at Matt's spot. It just popped
right
up
there.
just like that.
Gearing up over there.
But yeah, Phillies. Come on. Let's face it. We'll get some Phillies people on the air.
I hope so.
With us, and then
Absolutely.
I was at a Padre game in really good seats on Sunday for the last home game.
Okay.
White Sox played.
That's a good team.
Yeah, 14 people showed up to their last home. 14 people. Matt, 14 people?
Yeah.
Showed up to their.
Yeah.
Matt Chess is our chief of the boat here deals with all the minions.
Yeah.
But 14 people showed up to the White Sox.
It's not Comiskey, it's Comisme.
These are the Black Sox. These are the Chicago Black Sox, the ones that cheated away in the World Series. Same team back in the 20s.
They need to get back to that.
So if you could pick the four teams that you never need to see again, I'm gonna say it's got to be White Sox.
White Sox. I mean, there are some teams that you're just
let me change it. Four teams I never want to see again: Diamondbacks, Dodgers, Yankees.
Sure. Rockies.
Yankees.
Rockies.
You're not going to throw the Astros in there?
No, I like the Astros.
After that whole cheating
I like the Astros because their stadium's got the best food on the planet. It's a little dated.
A little bit.
The little choo-choo train with the oranges in it.
Yeah,
the food in there is amazing.
Well, they had the best unis of all time also.
Oh, come
However,
on. Actually, the Pirates did with their short pants. Just saying.
That's true.
Short pants Pirates.
Speaking of the White Sox, remember when the White Sox went with that, like the softball look? It was like a smock.
Yes, it was a smock.
And then kind of some
those are kids. The Pirates were wearing shorts and high socks.
Oh, yeah, they were.
With the stirrups painted on the side of the socks.
But remember the Pirates went to the old, Matty, was there a name for that hat? Like the stovetop hat with the stripes?
with the ring around it?
Yeah.
The ring around it type of
Which
thing.
was the original hat. Yeah, right. Which the original hat.
Yeah. That was.
And the reason we're talking about this is because we're getting into the business.
We're here.
Business of baseball.
Last week of the regular season.
Yeah. Well, what's interesting here is I got my strip of season tickets for postseason.
Okay.
And what they do is they say, this is how much it's going to. Major League Baseball sets the prices, by the way. Okay.
Oh, geez.
So this is for the divisional series. What's the next?
Championship series.
And then
Wild card divisional.
Wild card divisional. Yeah, wild card divisional championship series. Yeah. Then World Series.
Oh, I don't even want to ask.
$18,000 for 2 seats, all the way through. $18,000. I said, I'll just buy them one at a time. Actually, I may buy them and just sell them.
Well, I think
because I remember last time. It just depends what the Padres. I don't have. We're talking about Padres. I have Padres.
Okay, but if you've got Padres season tickets down at Petco downtown in San Diego, if they make the World Series, you've got the Wonka golden ticket.
Yeah, totally.
You can get firstborn for those.
Yep.
Yeah,
for sure.
Well, but here's the problem: is what happens when you have season tickets. Let's say you have good season tickets on the plaza level on the first baseline. Okay. Which is not the field. It's the next one up. Okay.
I've sitted in those before.
Yes, which are really good seats. Mm-hmm. They don't let you sit in those seats for the strip. They give you something similar, but Major League Baseball keeps the best seats for themselves.
Isn't that called like a monopoly?
Racket.
Racket.
It's called the MLB, just like the NFL. Exactly. Howie Font's coming up next. We're going to talk a little bit about the after party after the interest rate cut. What are we going to take a look at here coming up? And how's inflation doing? How's the stock market doing? Big Biz Show. Harry Burt Godwin will be back with us next week. In the meantime, it's the Boys Club.
Dulcet tones of the DTT, bringing us back to the Big Biz Show. Wherever you're watching, wherever you are listening, thank you as always for being along for the ride. I am Mike Costa, better known as Costa. That's Greg Todoroff. Of course, there's Sully behind the bar.
Big hello to the DTC.
Hey.
Yes.
Actually, it's the DTT.
DTT.
Yep. Mark Hattersley in today for James East, where's James is in the Midwest doing something? Is he?
Yeah, he is.
Touring? Is he touring with? Who's he touring? He's touring with. What is it? Who's the Mark Knopfler band?
Dire Straits.
I think he's tired with Dire Straits.
Is he really?
I think so. He was
That's
playing.
awesome.
I think he said he was. I don't know. Maybe I could be lying. I got
Maybe touring with this.
Look at the looks I'm getting from the band.
I was like,
James?
I want my
James
MTV.
who?
Remember that?
Yeah,
Dire
that's
Straits
right.
hit?
Speaking of Superman, Howie Font joins us from New York City. The Punctrepreneur, otherwise known as Crash.
Not gonna live that down, am I?
Oh, you should see the aftermath. I'm totally kidding. How are you, Howie? Good to see you. So can we talk interest rates real quick before we get to the real after party?
I think we have to, right? We've been talking about it for months and months and months, and now that it's here, exactly what we said was going to happen is going to happen, but it happened, so let's talk about it.
Yeah. So how significant was it in your opinion?
Well, it is significant because
It's 50. It's 50. It's a half of a percentage point. It's not a half a point. It's a half a percentage point. It's 50 basis points.
Right.
So it goes from what 5.2 to 4.9 or 5.3 to 4.9 or something like that.
So we were at 5 1/4, 5.25, and
Yeah.
now we're at 4.75.
There you go. All right.
But what's really important is actually not that the amount that they cut, although that is important. They chose to cut 50 instead of just a quarter, but it's the flip. So we were raising, we were holding, and now we're going down. So now that cycle has stopped, this isn't wishy-washy like stocks. This is up or down or flat. And they don't really jump back and forth. So we're going to expect rates probably to go down another 75, and they'll probably hold there. So that's a total of 1.25% down.
Yeah. And the interesting part of this is, don't get me wrong, this is not all a good thing, because passbook savers like seniors are getting less on their money now. Okay. People that are on fixed incomes, it hurts. It helps us in the credit card department. It helps us in the auto department. It doesn't help us in the mortgage department yet, because the mortgage rates follow the long bond, but that'll help eventually. You're going to see mortgages in the next 18 months float back down to those 2s and 3s again, if this goes.
But isn't this also the indicator that we're probably going to go into a recession, or we're heading there? I keep on hearing that on TV.
No, recession means 3 consecutive quarters of GDP decline growth. We had a recession, if that's the case, and we had one right the second month or second quarter of Joe Biden's term. So the traditional definition of recession has been that forever, and they have changed it. This administration has changed the definition. Well, you don't know you're out of a recession or when it starts or ends until it's over.
Okay.
You have to be able to look back. So dropping interest rates. Look at the Fed has 3 jobs, right, Howie? Maximum employment, stable pricing, low interest rates. Right. It's right on the website. The problem is, it's a dance. You know, you got to feather one thing. You know, we've got a hot labor. We got a hot mortgage news. We got a labor market that's kind of iffy, and then we got prices that continue to wane on us. So that's the scary part. Talk about the market though, Howie, because you and I always say you got to have money at risk. And as you say, if you participated in the market while it was open for the last 30 years, you'd be up about 13%. You say only 13%. 13% is a pretty good number. Talk about that a little bit.
Well, 13% over 30 years total, not annually.
Oh, okay. So that's
not amazing. 13% annualized is actually what you have gotten if you've held the S&P annually for the last 10 years. So that would be a great return on an annual basis. But what I'm talking about by the after party is when you look at when stocks move the most and when the largest stocks move the most, it's after hours, after earnings. The institutions are getting in on that action, but you only get on it if you're holding overnight. Right. So if you were to just own the market, if you were to buy every morning and sell every day at the close and didn't pay any taxes, you're making 13%. So what's happening day to day in the market really isn't that important. What's happening are these big jumps that are happening on overnight announcements. And I just thought that was a really interesting fact employed to.
So if you're not a guy that, let's say you're Mike Costa, who puts his money with his wife, who puts his money with a money manager and doesn't look at the market all day long like you and I do, how does someone navigate something like that?
Well, it doesn't change the practical advice, but I think it reinforces it in a really important way. Day trading, if you're just participating up and down in the day and you're done at 4, there's not that much to gain from it. What Mike and other people should be doing is holding long term, and when you have enough assets, have somebody help you manage it. Until then, ETFs are a great solution.
What about Howie? How does this tie into? How does this affect that really fun I word, inflation?
Yeah. So when we speak about inflation, we've had a big period of it for the last 4 years where the dollar's value has gone down in aggregate about 20%. That's huge. But it's been happening all the time. Even at 2%, it compound over a period of 30 years, it's going to compound quite a bit. So if you were holding that money in the S&P just during the day, making that 13%, that's in nominal terms. When you put inflation into it and you get real terms, your purchasing power has gone down by more than half, like 53%.
Yeah, and that's for real Americans. I mean, that's what you're talking about in terms of when you look at the CPI that strips out food and strips out groceries and gas. What the hell's the CPI number all about then? If you're stripping out the two most volatile items, the ones that you spend the most money on. And by the way, groceries and gas, in my opinion, are a tax. You have to pay it. You can't not go to work. Mm-hmm. You can't starve. No. It is basically a tax. And when your tax has gone up 50%, which is basically what you see, look at it, if your buying power is down 50%, it means the tax went up 50%, right?
Right.
That's it. So where do we go from here, Howie? With respect to the next steps here, are we going to see rapid inflation decreases? The election have anything to do with it? Is it buying the rumor, selling the news? How does this all shake out?
Well, the Fed has cut 50 basis points in part as a bet that inflation is going to stay about where it is or go down even a little bit lower, but they need to act on the jobs market. Yeah. So since we see the jobs market weakening, they are trying to stimulate the economy now, and they think it's safe inflation-wise. That is still yet to be seen how correct the Fed's going to end up. Right now, inflation's at about 2.2, but if it spikes again, the Fed's in a real bind, and then the economy doesn't know what to do all at once. As far as the election, we only have about 2 months. I think they can weave this through without getting the news or getting the results. The numbers take so long to, get updated.
So how are you guys feeling when you go to the grocery store? When you guys both you got family, you got mm-hmm. 2 kids, and you're out to dinner and you're out to the grocery store. You got your dinks, double income, no kids at home, really.
Right.
So what does it feel like out there?
You know what? I went to Home Depot the other day.
Yeah.
I feel like there is some gouging going on.
Do you really?
I do. I feel like there are some things.
I mean, not just inflation.
Not just inflation. There are some things that are priced at a level that when you compare them to, say, a year ago or 2 years ago,
mm-hmm.
because I saved my receipts, guys.
Of course. He does. He irons his
man.
And he saves his receipts.
So you go back and look.
What were you buying
a year ago? Oh, those salt tablets for your water softener.
I hate soft water.
Right?
Feels like you can't get the soap off.
I agree. Yeah. But anyway, so you got to do it.
Yeah.
Okay.
Right? So I'm getting these salt. I literally was paying like $3.75 a bag.
Yeah.
2 years ago.
Yeah.
You know what I'm paying right now?
What?
You know what I just paid?
What?
$8.50.
See,
that's not inflation.
So they're it's not inflation.
So they're salt tablets. Did the price of salt really go up? Let's be honest here.
I was thinking it's so funny. I was thinking about the movie. I was so hungry yesterday. I was eating over the sink. That's how a bachelor eats salad. That's how a bachelor eats salad. Takes a piece of lettuce and some salad. I was thinking, remember the movie Castaway? And I was thinking, it's so funny you bring up salt. I was thinking, boy, remember when he finally discovered fire and he was eating lobster?
Oh my God.
And he goes, God, I need some salt. I figured, I was thinking yesterday, how do you make salt? That's cheap.
Yeah.
And you bring up that.
Yeah.
Do you know what the inflation? What about for you guys? Is it?
Yeah. Now, because we have the 253-month-old who's taking a gap year, so we're feeding him. We buy our bagels.
Yeah.
From Vaughn's.
Yeah.
Dozen bagels is $14.
What?
Yeah.
$2 a bagel.
Yeah. And normally,
Well, you can get a bagel sandwich for $14 at a bagel place.
thank you. Exactly what I was going to say. So, but I feel normally that's like $6 or $7.
Yeah, is there anything more delicious than cream cheese with chives in it?
Oh.
Make your own, by the way. This my new deal is you get the whipped cream cheese and you get some chives, chop it up. You got to take some non-stick spray on your spatula when you scoop it out.
What kind of bagel do you go with it? Everything?
Everything.
Oh, yeah.
Or a jalapeno.
Jalapeno cheddar.
Yeah, with the 4 pounds of cheese on top and jalapenos. Is that right? I'm going to talk to you about shadow inflation here in a minute. Also, Todd Rampey, Wealth Builders Institute, one of Mike's finds here. We'll see how that goes coming up. Looking forward to having him. Big Biz Show. See you in a minute.
It is the Big Biz Show. We are in the Loft 100 studios here in sunny Southern California. As always, we appreciate you being along for this wacky, crazy ride with these wacky, crazy kids, including me, Greg Todoroff. And what is it, Captain Underpants or Captain Finance? Sully.
Captain.
Do you have those books?
Oh, of course.
Hey, see you today, 125 million TV homes strong. Let's not forget Bloomberg El Financiero in Mexico, another 15 million homes there. Soon to be in Bloomberg EU. Can't quite get to the Bloomberg prime time in the
Baby
US.
steps.
That's gonna.
They're lost.
Dan Negroni's here. Dan, great to see you, buddy. Dan Negroni,
Hello, everybody.
CEO, coach, consultant, chief launch officer for DanNegroni.com, and of course, Dan's been a friend of mine for a long time. Dan was a friend of mine when I was a taco shy of 330 pounds.
Get out of here.
I was in a spin class, and what happens when you're riding a bike, when you're that big, your legs go like this. Your legs don't go like this. So I was in a spin class. Dan,
This is true story.
Dan's in the front row. And the reason I was in the back bike in the very front, because I could see the clock there.
I'm looking in the
All I have
mirror.
to do is wait 15 minutes. I was talking to somebody literally last night, about to go to college, not to go to college. And I didn't really realize what you were coming to talk about today.
I just wrote a blog on it
I
literally
know.
last week.
And and maybe that it was in the back of my mind because I read your blog about it, and I thought to myself, okay, it is $150,000 contemplation
Minimum.
right?
probably.
Per kid and
Per kid, yeah.
I was thinking, well, if I were to do it over again with all of my children, and look, I got one's a doctor, one's a senior graphic designer, both of them killing it. I couldn't be happier. However, they both would have done the same thing had they gone to junior college for 2 years and transferred and had a cup of coffee at Harvard, Stanford, or any of the schools. The other thing I was thinking is, why aren't we spending enough time talking about how to mitigate those costs? Like, I'd like to start a company where you sell condos to freshmen, and then you use the upside after 4 years to help pay for the tuition. Whether it's $20,000, $100,000. I mean, the real estate typically will go up in the right markets. You couldn't do it in every market, but Dan, to go to college, not go to college. What's Gen Z saying right now?
I think they're asking the question, which they never asked before.
Yeah.
Everyone said, when I grew up, your parents said you need an education, you must go to college.
Right.
And I think the really great thing about college is not the learning, because you're not learning, you're having experiences, right?
Yeah.
And those are your life skills. They're not teaching you it in class. Right. I mean, the professors, I shouldn't say it now that I'm a college professor, but you look around and it's just very rote.
Yeah.
Anything you see in a book, you could read, you could watch videos on.
It's almost like what was the movie with Ben Affleck and Matt Damon,
Good Will
Hunting, where he says in the bar, he goes, look, half the stuff you're doing, I could read in the public library for $30 in late charges. By the way, Dan
is just click for it.
Yeah, exactly. Dan, you are the next gen management and talent development consultant. And when we first got together on the air 8 years ago or better, you were talking about millennials, and such. Is the millennial?
They're all grown up and
they
adults.
are. So is the Gen Z, Gen Y, and I don't know, we start over again?
Gen Y is millennials, same thing.
Okay,
Gen X, right? So yeah.
So what's
Boomers, Gen X, Gen Y,
is the mentality moving in the direction you thought it was going to move in, or are these Gen Xers moving into baby boomer thought processes and so on and so forth?
Yeah, I think that's a really good question. I think that the question really was, how much is tech going to change the future generations?
Yeah, right.
Mm-hmm. And I think you see with Gen Zs that has changed more than millennials, because what happened, I think, in 2010 was the iPhone, right, from flip phone to computer in your pocket
Right,
everywhere
sure.
you are. And this rewiring of America happened mostly to Gen Zs. Millennials were old enough that they had experienced life, they had done a lot of free play, they had learned a lot of real things, and Gen Z has grown up in the silo of this screen.
Well, what's interesting too is interesting to think that 2010, 2012, the word iPhone wasn't even in our lexicon.
Right, isn't that crazy?
It wasn't even in our lexicon.
Yeah, it's only 12 years ago.
When you talk about technology, and the reason I say this is because I remember as you were saying this, we had kids similar age.
Yeah.
And I see my daughters now who are close to 30 years old who were never going to buy a house, didn't care about those things, didn't care about, only cared about taking care of the people. Versus taking care of themselves. Now suddenly they're looking at buying houses.
Yeah,
they're saying, "I'm not." They're own business. I'm not paying that guy $16 an hour.
Yeah.
It's funny how you only get
Their
perspective.
minimum wage is 20.
Yeah, exactly.
Yeah.
And it's funny how you get perspective when you sign the front of a paycheck versus the back of a paycheck. What's the mindset now? Does the mindset change automatically?
For sure, right? Like adulthood, they grow up and they want to achieve things. And the world is very expensive now.
Yeah.
And so it's harder for them to buy homes in particular areas.
Right.
You could go to the middle of the country and probably still buy a house.
Yeah.
With respect to what it's here.
Without mortgaging your parents' house to get it.
Basically, or without borrowing, kids are borrowing
Right.
200, 300, 500 grand from their parents to get into homes, and interest rates are higher, and so it's a problem. But I think, the biggest challenge is, millennials have adulted and they want homes. Gen Zs are trying to figure out who they want to be, and they're a little bit delayed by the phone. Sure. They haven't had real interaction.
Okay, so as I tell everybody on the show, and I think I've told you this before, I've got a 253-month-old I'm living with in my house. And is it wrong I'll be 60 in November. Is it wrong for me to continually tell him, dude, get your nose out of your phone, smell a rose, go roll in the dirt, play with your Tonka trucks?
Or are we past that?
Is that wrong? Is it because they're just...
Well, for sure, it's not wrong. It's the complete right answer that we all did.
Yeah.
The question is,
Does it
why didn't we do it 10 years ago?
Yeah, parents would tell us to go outside our whole lives.
Exactly.
Yeah.
And so we weren't keeping them away from video games. We weren't limiting their screen time. We weren't saying you couldn't have social media till you were 16 years old. And it's created a real challenge. And so now we have to go back. Truth is, the world is safer today than it's ever been. So don't go out and play and your parents watching you for every minute when our kids grew up versus when we grew up. This see at 5.
We were doing jumps.
Right?
We were doing jumps on our big wheels at 5 years old with a BB gun.
Yep.
So this whole safetyism has affected them, and they're scared. And so they're really smart once you get them trained. They really want to do good in the world. They have a ton of tolerance, but they don't know how to initiate, is what the studies show.
Two questions.
They don't know how to start.
Two questions. The study you're talking about is the study done in Marley in Australia,
Yes. Gen Z. It's
which is
being published October 4th.
And you're teaching this in college right now.
Well, I'm teaching Gen Zs, and I am using the study and the teaching to confirm that my experience is correct and that the study is correct, and it is correct.
So here's my question. You had a great sort of philosophy when you first started in the millennial education, sort of teaching us about millennials and teaching business. There was the millennial side of things, and this is how you have to act in business. But then was the business side of things. This is how you have to deal with your workforce.
Yeah.
How are we doing as the other side of Gen Z on dealing with their new paradigm
when I
shift?
wrote the book, I wrote in it Next Generation Leaders, and it required both sides to change, to your point. And I think we've done a better job of changing than we've done of being able to mentor and teach them to change.
So we were more malleable than they were.
Well, we were malleable, but we're not really good at coaching and like letting someone solve a problem instead of come to us. Give you an example. I give the class a bunch of assignments to do a presentation on strategy, and they want a guidebook. And I say, this is strategy. There is no guidebook for strategy. Yeah. And now you have the internet. You don't have to go rip out pages from an encyclopedia like we did, right? Or go to the library. You can actually figure it all out. And so stop asking me for a guidebook and start asking questions.
Dan Negroni for president. We need to get you in there every week. You are invited every week. Okay. As long as you want to come in. DanNegroni.com, DanNegroni.com, the quintessential next generation talent development consultant. And of course, what school are you teaching? Are you going to be touring?
Cal State San Marcos.
Cal State San Marcos? Yeah. All right.
Yeah, you should come. Well, get you as a mentor.
We should do a live show.
Fun. That would be fun.
You absolutely should.
They'd love that.
More of this coming up.
It is time for the Sports Biz Minute, brought to you, as always, by the great people at Prize Picks, the #1 largest daily fantasy platform up there. Simply sign up at prizepicks.com. Sully Grug, we're going to start off in college football. USC Heisman Trophy winner Reggie Bush has filed a lawsuit against the school, along with the Pac-12 and NCAA, over past use of his name, image, and likeness without compensation. This is now becoming a trend. Back in June, members of the championship-winning North Carolina State men's basketball team from 82-83 sued the NCAA and the Collegiate Licensing Company over their long-standing usage of their NIL.
This is like going back to high school and suing them for not paying you to play pro football.
Well, at what point, Sully, is the cutoff? Or the statute of limitations run out?
It's cut off when everything before NIL is the cutoff.
Yeah.
When they gave name, image, likeness rights to collegiate athletes.
Exactly.
That's the day it starts. Nothing before. You can't do it now. If these pictures and photographs and likenesses were happened after the NIL decision by the NCAA,
right,
then you do it. Otherwise, you can't go back and stuff the genie back in the bottle.
Nope. Speaking of college football, 6.3 million tuned in for USC's first ever Big Ten matchup this past Saturday in Ann Arbor, Michigan, which CBS says is their most watched Week 4 game in 10 years, higher than Ole Miss Alabama last year. This Saturday's tilt with number 2 Georgia visiting number 4 Alabama should also draw huge numbers as well. Once again, proving, Sully and Greg, that the SEC is king in college football.
You know, what made Michigan fun to watch the last couple of years was Harbaugh.
Oh, totally.
I mean, so I don't even know who the coach is anymore. I'm not sure. I think I need to find another team other than the Chargers.
There's a lot out there.
Who's coaching? Do you even know the coach?
The defensive coordinator is the guy who got the position when Jim Harbaugh left. And his name, Greg,
Any other professional NFL athletes or coaches now coaching college? We saw Pete, what's his name, up in...
Well, Deion Sanders is the head coach at the University of Colorado.
Okay, there you go. Anybody else?
Kind of turn that program around.
Maybe that's the one we follow from now on. With
Deshaun Foster, who was a Carolina Panther as a player. He's head coach at UCLA. So
I want to see Bruce Bochy go from football or from baseball to college football and see how that works out for him. The guy, I think the guy.
You know how big that helmet would be?
Oh my God, he's got this head the size of a planet. What else you got?
Finally, the roast of Tom Brady was a big winner among sports programming on Netflix during their first half of the year in terms of global views. Brady's special not only outperformed all sports titles on Netflix from January through June, but it was also number 26th among all Netflix programs. We're talking genre, any language in terms of views, and the show wasn't even offered globally. Now, I don't know if that's the reach of Netflix or the fact that it's Tom Brady, who's obviously he's known the world.
He looks like a Kardashian. I mean, like literally like when the Kardashians cut their hair.
He's looking a little...
how much work has he had done at this point? I mean, he was a handsome SOB in the first place.
Put it this way, another facelift will have a permanent goatee, if you know what I mean. That's the Sports Biz Minute. It's brought to you by Prize Picks, largest daily fantasy platform out there. It's very simple. Sign up at prizepicks.com. Once again,
there you go.
Here's Sully.
All righty. I will tell you. Okay, that was a time-released joke. There you go. Richard Stockton is the president and CEO of a company called Braemer Hotels and Resorts. We've had him on the air before. Fantastic guy. Richard, great to talk to you again, man. How are you, sir?
Yeah, good to see you. Yeah, happy to host you as a VIP whenever you like, Sully. You let me know.
We need to do is we need to go bring a Big Biz show to go out there and do a show at your property.
Yeah. On location.
On location. Yeah. Hey, talk to us about the hotel market these days. It's interesting because COVID changed everything for everybody, especially hospitality. I see as open air indicators, as I love to do 3-day trips, that's my deal. If I leave on a Thursday, come back on a Sunday, it makes me really happy. Thursday night to Sunday.
Yep.
I'm seeing it more difficult, unless I've got a dude in the business like Richard, to get a room, to get it in a decent hotel. Is that an open air indicator say you guys are getting busier, or is that just because we live in Southern California here?
You know, rates are way up. And there's a recent report that came out, maybe you saw, which said that the number of hotels in the U.S. that are charging $1,000 a night has quadrupled this year to date, relative to 5 years ago before the pandemic, 2019. So rates have gone up, and they've gone up a little bit unevenly. You know, if you are looking at resorts, particularly luxury resorts. Average daily rates will be up over 50% from 5 years ago. Whereas on the urban side, they're up, but not quite as much. And in both cases, occupancies are still a little bit lower than where we were 5 years ago.
Richard, talk about your properties specifically, because if you go to the website, it's really interesting because you've got some really unique properties there. But talk about your business in total for people who have not heard of the Braemer Hotels and Resorts.
Yeah, so Braemer is a lodging REIT that specializes in owning luxury hotels and resorts. We have a number of the hotels managed by major brands. We have a number of Ritz-Carltons. So say Ritz-Carlton Lake Tahoe, Ritz-Carlton Sarasota, Ritz-Carlton St. Thomas, Ritz-Carlton Reserve Dorado Beach in Puerto Rico. We've got a Park Hyatt in Beaver Creek. We have a Four Seasons in Scottsdale.
Wow.
So we focus on that luxury end of the hotel spectrum because we believe that over the long term, luxury hotels have higher barriers to entry. It's much more complicated to build a luxury hotel as competing supply. It's more difficult to finance. It takes a lot more time, a lot more resources. So that has some built-in protections to the inventory. That's why we're in the luxury space. Can
I ask you? The Fed Reserve just dropped interest rates half a percentage point, which brought us down in the 4.7 range. It's supposed to trickle into inflation, obviously. Does that affect your business? Does it affect the hotel business at all?
Yeah, it affects us in two ways. It affects us on the top line, and it affects us on what I'd say on the balance sheet. Clearly, we're starting to see in the hotel business some early signs of of economy that's getting a little tighter. And I think the Fed has kept interest rates high enough for just enough time to start to see that. You start to see unemployment ticking up. We're seeing a little bit of a pullback in demand for hotel room nights. So that's kind of the one thing. So this interest rate cut is a welcome relief. We want to put more cash into people's pockets so they can stay at our hotels. But then also from a balance sheet perspective, we finance our properties with primarily floating rate debt. And so we saw our interest expense triple when rates went up.
But doing non-dilutive debt like that versus equity is a smart play, and it's a little bit of a gamble sometimes when these things happen. But this is good news for you eventually here, because obviously mortgage rates and interest rates follow those type of interest rates follow the long bond. You can extrapolate the fact you'll probably be doing a lot better on the bottom line.
Yeah, and we use about 40% of our debt, so net debt to gross assets we call it. Which we think is a nice conservative level of leverage. You want to use as much debt as you can without putting the company at risk. And so we believe that in the hotel business, because it does go through cycles and it does experience some volatility at times, you don't want to go really any higher than that. In fact, over time, we might come even lower. And a lot of our peers have even less debt than that. And debt's expensive right now, so there's not a lot of benefit to taking on that incremental risk.
I want to ask a question. Typically in a hotel arrangement, I've interviewed a number over the years, but not a lot. Isn't there an owner of the property and then they insert an operator? So in other words, we own a lot on the beach, and then Four Seasons comes in and operates. Is that how you guys operate as well, or do you just buy the whole lock, stock, and barrel along with the operating agreement that's in place?
Yeah, it's probably the biggest misconception for the man on the street about the hotel business is that when you drive down the highway and you see a Marriott, you say, oh, that's owned by Marriott. That hotel's owned by Marriott. It's typically not. It's typically owned by a real estate investor that owns a bricks and mortar. And then the real estate investor will potentially hire Marriott to manage it, but then also brand it. But sometimes hire a different manager entirely, a company that you've never heard of, to provide all the employees to manage the hotel, and then do a franchise arrangement to put the brand on the hotel. Yeah. So it can be up to 3 parties involved in a hotel as you see it in the market.
When did you guys acquire Scottsdale Four Seasons?
It was December 2 years ago.
Yeah.
It's been a fantastic acquisition.
I'm glad you did, because I went in July 4 years ago, and I swear I thought I was at a Hampton Inn. No, I love Four Seasons.
Yes.
But when you're walking around the pool and there's empty chili dog plates on the coping. I when I saw this here, I'm glad they did the acquisition, because it makes all the difference in the world sometimes how they operate and who the management is. You are a publicly traded company, Richard, and I know you can only say so much, and we'd love to have you back in there again on a regular basis. Next 18 months for you, in as much as you can detail, What are you looking forward to, and what do you think is going to happen with your company?
Well, I could talk, very freely about what the industry is looking forward to, and I think it's similar for us. Is we are in a period of where capital is constrained because interest rates have been so high. So as a result, there's not a lot of supply of new hotels coming into the market. The supply this year of new hotels is about 0.5% of the existing inventory. That compares with about 2% per year historically. Mm-hmm. So when we have less hotel rooms being added for the existing owners of hotels, that's good because there's more scarcity and therefore our rates should go higher. And we're seeing that more, particularly in the end that is full service and luxury where we operate versus the economy side. And so, that should be those should be the segments that benefit most in the next couple of years.
I think we'd like to have you come in studio and maybe we do a Big Biz show to go with.
I think so.
A tour of all of the properties, if I'm not mistaken.
Nice.
Hey, Richard, want to have you back. Thanks, brother. Richard Stockton is his name. President and CEO, Braemer Hotels and Resorts, BHR. You can go to bhrreit.com. REIT as in Real Estate Investment Trust, bhrreit.com. And there you go.
I think we start at the Park Hyatt Beaver Creek.
Another beautiful day inside the Loft 100 studios in Southern California. Beautiful because of two things. The Big Biz Show is on the air. And number two, you are with us. Us being Costa, Greg Todorov, and Sully.
There you go. Hey, Taylor Trio today. Good to see you, boys.
Oh, yeah.
Have you discovered pickleball?
Oh, yeah.
Are you a pickleball fanatic?
I'm not a fanatic, but we have a portable net that we roll out into the street and play.
Oh, wow.
Once in a while.
Wow. Street pickleball. That's like street football. You got skinned knees and stuff.
Oh, yeah. Look out for the bumper.
Go to the Rambler. Greg and I played pickleball together the other day. I would argue that, so my day starts so early.
Like 3:30 or
4:30.
4? Okay.
But by the time 7 a.m. comes,
you're out.
I can take a little break.
Yeah. Of course.
So I can play pickleball almost every day. I figured out last week I played 12 hours of pickleball. I played 3 on Saturday, 3 on Sunday.
Get out of here.
And then I played, so there's 6, and then I played every single day, for a little over an hour in the morning at 7 o'clock.
Are you going to a residence or a club to play?
Go to a club.
Nice.
But so Greg came out, and it is addicting. And
Yes, it is.
It is. Greg and I are forming a team.
Yep.
With Matt, we're going to do three. We're going to play threes instead of
3 pickles,
doubles.
6 balls.
3 pickles, 6 balls.
Nice.
Yeah. Which is also the name of a.
The name of our new gang.
You totally stole my thing.
I'm sorry. I was struggling doing the math.
I'm glad. By the way, so we have a great partnership with Taylor Guitars. Taylor Guitars named me and James, a couple of featured artists, for Taylor Guitars. Of course, an unbelievable guitar company that has everyone from Sting to Paul McCartney playing their guitars. They are doing an unbelievable charity for a group called Guitars for Vets. And what they're doing is they've teamed up with a watch company that takes remnant wood from the guitars, makes watches out of them.
Oh, love that.
And a percentage of the sales goes to guitarsforvets.org. PTSD is a big piece of our daily conversation, as you well know. And helping vets cope with PTSD is now a function of music. And I'm going to bring on Nigel Fischer. Nigel Fischer is the Director of Advancement for Guitars for Vets. What a great organization. Nigel, thanks for coming on. We had a chance to talk to the guys at Taylor once again last week on a show, and I know we got an event coming up. But talk about what you guys do, because this is really interesting when I see these videos of guys sitting in an auditorium all playing guitars, and they're all vets that were suffering PTSD. Talk about this for a bit.
Yeah, thanks for having me on today. Really appreciate the opportunity to talk about the mission and how we're serving veterans. So this came together 17 years ago, a partnership between a guitar instructor and a Vietnam vet. And they realized that there was a lot of joy in the camaraderie of being able to play together. So we've created that community surrounding our over 150 chapters nationwide at this point, where we can share that healing power of music with veterans that may be struggling with PTSD or other invisible wounds of service.
Nigel, you served, and as always, thank you for your service, what you do for us, guarding the wall for us. You were wounded in combat. How did you deal with that when you came back?
Well, it was a variety of ways. A lot of family support from those that I served with, but I spent a lot of time outdoors, and I found that the solace of outdoors was immensely impactful. But then I needed something else to round out that healing, because as we know, the weather isn't always favorable 24 hours a day to be able to go out and enjoy activities that we love. And the guitar is that solace for me that is available 24 hours a day and really at an arm's reach. I can reach out and connect with my guitar anytime.
I think part of this, though, is it was surprising to me to think that having to deal with something as extraordinary as PTSD could be, I guess, waylaid for a minute by having to learn to play an instrument. And I don't use the word distraction because music is much more than that. But boy, you have to concentrate so hard on learning a new instrument, specifically guitar, which I've been playing since I was 8 years old. I would argue it's harder to play than piano. But I would also, every kid in the world, I would start on piano first, by the way. But long story short, talk about how that, what was the light bulb that happened when that occurred?
Yeah, it's, when you pick up the guitar and you connect with it, you definitely go, as you said, to a different place due to that focus and attention. And you're utilizing a different part of your brain, of course, when you're engaging in artistic or creative types of outlets. And so it's just really this pleasant feeling when you feel a little bit of anxiety or something along those lines, and you can change that trajectory by seeking out that very positive feeling connecting with the guitar.
Yeah, I think whoever came up with it was brilliant. Talk about your upcoming event and how people can get involved.
Certainly, thank you. We've got an event October 11th. It's going to be at the University Club in San Diego.
Okay, so on for our national audience, anybody listening, let's say in Los Angeles, California, Phoenix, Arizona, Las Vegas, or here in San Diego, University Club's downtown San Diego. So you're doing an event. What time does that event start?
It's going to begin at 5 p.m. Doors will open for the performance at 6. Scotty Hastings will be our headlining event, and I know that you're going to be joining us as well. So we're really excited for the full lineup of events that night, but really supporting our veterans and celebrating 21 of our recent graduates from our program that night.
So you got 21 guys going to be playing a song or two that just graduated. That's fantastic. I love that. Can I ask you this? How can people help other than just getting involved in that? Is there, you have some unmet needs, I'm assuming. It's got to come down to money because you got the guitar thing figured out. So how can people help out, and where do they go to do that?
Certainly, they can come to our website, guitarsforvets.org, and they can join us as volunteers to help support through delivering guitar lessons. And as you mentioned, of course, donations are always very welcome. We are a business, even though we are a nonprofit, because we've got to be able to support those resources needed to deliver the program long term for so many veterans that truly are grateful for everyone's support in this effort.
Nigel Fischer, Director of Advancement, Guitars for Vets. You can go to guitarsforvets.org. Thanks, buddy. Appreciate it. Get out there and see you guys. I know the band's going to be out there playing in the background.
The Top Symphony Towers.
Well, the Day Trader Quattro is going to go out there, I think.
Love it.
Mess around. For good stuff. All right, that does it for us. We shall see you tomorrow, Big Biz Show. BigBizShow.com. See you in a minute.